How you doing, friends? It is Tuesday, January 21st, and this is the 0DTE Morning Market Analysis. And today's focus, as you may have seen in the title, is New World Order. Now, I don't normally get into anything that has to do with politics, but it is inescapable that when there is significant political changes, it could affect markets, and I want to analyze it from that point of view. And so it's going to be a little bit longer, and you may find it somewhat interesting if you're into that sort of thing. I think that it's good to always have kind of a worldview, situational awareness. And the general takeaway I have, and what the reason for me talking about this, I think is pretty obvious, and that is yesterday a new president was sworn in, President Trump, and his new administration, and he has already hit the ground running with dramatic changes, including leaving many of the world organizations, for instance, leaving the WHO, the World Health Organization, and the Paris Climate Accord. And the reason why I thought talking about this is that I was looking at the economic reports for this week, and what stood out at me immediately was that the World Economic Forum, the WEF, is having their annual get-together from today all the way until Thursday. And as you probably, maybe you're not aware, but that's a very globalist-oriented organization. They take a global view of everything. They want everybody to do what they want to do. And they're led by a real-life supervillain, Klaus Schwab. Maybe that's controversial to say, but I think that that's the way the Trump administration will probably view him, and it will be interesting to see how that all works out. Now, I at first I was thinking, okay, is this going to cause all kind of anxiety with the world or the WEF, and how will that impact markets? Will that create a rise in overall volatility, which is, from a trader's point of view, that's cool. But, what does that mean in terms of our overall situation? But I'm mostly taking this from a trader's point of view. So here's my analysis. And I think a lot of people will think, oh, there's going to be all this contention. They're going to go going back and forth as if President Trump will take them as a serious threat. I don't think that that's going to happen at all. I think he's going to look upon the WEF with complete indifference, instead focusing on U.S. interests, and the administration's posture would implicitly demand that other nations and institutions align with his or the U.S. policies. So what would that market impact look like? I mean, this could, I think, marginalize World Economic Forum or WEF-led initiatives and create a more U.S.-dominant economic landscape benefiting domestic focused sectors like energy, defense, and manufacturing. So that's kind of interesting. So that means that energy may be a far more impactful thing that we look at each week when we're looking at economic reports. We haven't been in the past, over the past 4 years, because it seems to have been diminished. And I remember, looking at Forex Factory and economic reports, and every Wednesday the EAI report would come out. The petroleum status report would come out, and it would be colored red, meaning that it had high impact. But it has been colored yellow, which is the lowest impact rating on Forex Factory. But I think now it is going to be very different. Of course, one of his initiatives was drill, baby, drill, right? So they are planning on making the U.S. the predominant supplier of energy to the world. And that's going to affect a lot of things. It's going to marginalize or disrupt, I think, worldwide prices. And it means that all of the different, agreements, many agreements are going to be changed or overturned or whatever. And I think there's going to be a demand for buying U.S. energy. And that will bring prices down, etc. But that's going to cause, certainly, that's going to be a big focus now on weekly reports. Will this... Some people might think, well, what does this mean? Is he a dictator? No, I don't think that's it at all. I think the America First agenda is really basically follow us or be overrun type strategy. So I think the administration could enact policies that override globalist frameworks, demonstrating our economic dominance, such as energy independence, deregulation, and then the big one, tariff-driven trade policies, because he's announced the formation of something he's calling the External Revenue Service, as opposed to the Internal Revenue Service. This would be the ERS instead of the IRS. And there's even, and the whole idea behind that is to collect tariffs across the world and as our primary income source, and possibly even eliminating the personal income taxes, or maybe even corporate. I'm not sure. So how's that going to impact the markets? Well, it's going to impact energy and industrial sectors. They stand to gain big time. ESG and renewables may face headwinds as U.S. policies pivot away from those climate-first priorities. And it will create a kind of a transactional relationship with these globalist organizations. But so rather than completely opposing the WF, Trump will probably want to leverage them, and any way that it serves the U.S. interest. I mean, he's not going to just totally ignore him. He understands that all the other countries are more or less, biting at the feet of the WEF. But he's going to bypass multilateral frameworks in favor of bilateral agreements. It's us and you and me, us and them. And how could this impact the markets? Well, this could disrupt global supply chains. That in the beginning, this sort of realignment is going to cause a lot of anxiety for sure, especially though within tech and manufacturing, considering how things are kind of geolocated in terms of their primary importance, like chip manufacturing and precious metals, as well as rare earth elements and stuff like that. And so there's going to be kind of a transaction base. Basically, he's a businessman. He's going to do what he thinks is best in our interest and leverage our economic power to try to make a more transactional thing between us and them. And I think basically that's going to provide incredible opportunities for U.S.-based industries, and they'll probably thrive under these nationalist policies. I think the WEF, this is probably something that may have underpinnings, but they're going to have reduced global influence. And Trump's indifference could sideline a lot of their initiatives, such as stakeholder capitalism and ESG-driven frameworks. In fact, you've already seen that ESG and DEI type of things in corporations across the country and even around the world are completely announcing, almost like bowing to Trump, that they're completely eliminating their ESG and DEI initiatives, which is very interesting. And you'll see a lot of major CEOs from the biggest companies in the world are now, trying to get Trump's attention, actually going to him and meeting. They've already been doing this prior to him even taking the oath of office, going and meeting with him and trying to plead their case, because most of them have offshore concerns, either manufacturing or whatever, or markets. And so I believe the U.S. is going to withdraw from a lot of these agendas that are defined by that ESG and DEI stuff, of course, and that's going to diminish their overall traction across the globe. So you're going to see, this is pretty big stuff. It's almost like a complete change, shift, like as if the magnetic poles of the Earth just flipped. But this will definitely open up opportunities for traditional energy and energy sectors. And ESG heavy industries will face reduced capital inflows and slower adoption of green policies. I don't really think that that's necessarily true, that our move towards more clean energy, I think that that's still going to be a market-driven type of thing. But it's just that it's no longer going to be financed and subsidized by the U.S. It'll be a business-first, policy-over ideology approach. Trump's focus will be on tangible wins for the U.S. economy, such as, we already know there'll be massive deregulation, huge infrastructure development, the tariffs, and also an ideological alignment with global organizations. In other words, it's kind of, hey, it's our way or the highway, man. And so what's that impact on the market? I think this could drive growth in traditional U.S. sectors like defense, construction, and energy with renewable energy. And the globalists will have to basically either do it or face stagnation or decline. That's what it really comes down to. And like I had mentioned before, the real biggie, is the creation of the External Revenue Service. I mean, a lot of people thought that this was a meme or, just a joke or whatever. And Trump tends to be hyperbolic about his things, sometimes saying, hey, I'm going to buy Canada and Greenland and Panama. But that all turns into leverage for him. So what's on the table here? He's floated the idea of replacing income taxes with tariffs. Now, from an individual point of view, would you like to not pay income taxes anymore? Damn straight. But that also means that there will be taxes on goods and services coming from outside of the country, which means that those prices will likely go up. But if you have a lot more money to put towards those prices, I think it ends up being a net plus for people. And so this would create a significant pivot towards tariff-based revenue. And so what's the impact of that? The winners? Domestic producers protected by tariffs, traditional manufacturing, reshoring initiatives. The losers? Imports, heavy industries, tech, consumer goods. Of course, this is where those bilateral negotiations come in, and how using tariffs to create the kind of best case scenario deals with others to reduce those cost pressures, to sort of grease the skids on supply chains. And while it could impact profitability with some, it's going to improve it dramatically for others. So again, it's like a total realignment. So how does this look for 0 DTE and volatility for the next 4 years? I think it's highly likely, at least in the beginning, that we're going to see much higher volatility. Although right now the VIX is down in zombie land, and a lot of elevated and intermittent spikes. And those are the things that we love as traders. We love those spikes, and then they take a little while to sort of work their way out, and more spikes, and that causes us incredible new opportunities for collecting premium. And so until this very unpredictable nature of this new U.S. policy changes, we're going to expect this kind of environment. And of course, this is going to be across the board. New tax frameworks could disrupt markets. Opportunities in intraday trading, though, we're going to see a lot of directional moves. And so we're not just premium collectors, we're also trend followers. So there may be multiple trend changes based on these type of things until the market kind of settles in with these new policy initiatives. Trade disputes could cause sharp, unpredictable moves, or even predictable moves that could be exploited using our strategies. Certainly, I think we're going to see increased uncertainty, which means larger swings in premium pricing, definitely for out-of-the-money options. And that's going to create opportunities to sell risk on exaggerated moves. So The key focus areas for us is reacting to policy-driven market gaps, tariffs, energy, independence shifts, playing volatility spikes around global or domestic, what's the word coming to me? Disruptions. In other words, VIX spikes. And aligning trades with sectors that are most impacted by policy announcements, like I had mentioned before, energy and manufacturing. I think that one of the big moves is that there's going to be a big push to bringing lots of manufacturing back to the U.S. So as we're potentially reshaping this global economic leadership under Trump and his administration, I think markets are going to have this sort of transition period with higher than average uncertainty. And this creates both risk and reward opportunities for us zero DTE traders. And that's because that's all we live for, is to exploit that heightened volatility and directional moves. So overall, I think it's going to be a really good environment as zero DTE traders, or option traders in general. So we have to stay adaptive and focused on managing this, what's our core, and that's asymmetric risk to reward, and this unbelievably evolving and changing landscape. It's really, truly a market shift, probably the biggest one that I've ever seen in my life, and I've been around for a little while. I think, anyways, I was spurred on when I saw that the WEF had their annual meeting, and I just thought, man, I would love to be watching some of those speeches and their reaction to his inaugural speech and so forth. So it's going to be very interesting to see how that all pans out. So with all that said, I think we should get to what we're normally here for, and usually my focus things are very, very short. But I think this is setting us up not only for this year, but really for the next 4 years. So it's super important. I will produce a lot of information on that. How, the things that we can do as traders to be situationally aware when these things are going to be impactful for us, and how we can take advantage of those. And particularly, you'll see this sort of information in the Zero DTE Academy. The Zero DTE Academy is a school community. It's encapsulating our entire strategy, our process, our methods, our outlook, our Zero DTE focused, including some weekly live presentations. And it's a fantastic value if you want to start learning how to trade with options, particularly with Zero DTE. So go down below, the link's there. So now we're going to get on to what we're really here for, and that is the market. And this morning there aren't any substantial market reports. So there's really no additional energy there. Well, I haven't even looked at what the big ass fly is showing us this morning, and I'm going to skip that this morning because I expect that it's going to be much higher, particularly after we've had the long weekend and everything. But I might be wrong, so I'm going to bring it up anyways, and I'm opening it right now as I speak, because I just realized I don't have my trading platform open, so I can't really tell whether or not the big ass fly is going to be in play, and that would be irresponsible of me. So it's asking me for a code, of course. Because I have two-factor authentication on everything, which is a must. And what we'll do, first of all, is we'll take a look at the VIX and all that. So let's do that. We'll start off with that. We can see, I did make a change, by the way, to adapt to what I believe this new evolving landscape is going to present us. Overall, I've increased the average width of the butterfly ranges that I'm looking at. So, for instance, in super low volatility on the VIX like we see now at 15.76, which is in zombie land. I previously, if you look over into the left side of the chart, I previously had a width range between 10 and 20, but now I've increased that to 15 to 25. And I did so all the way up the scale. So we're in zombie land. We're looking at widths between 15 and 25 wide. Our next step is to go to the big ass fly and see what it is, so we can figure out what side of that range that we should be on. I didn't update the range guide, but that should be pretty obvious here. So what I need to do is, because I just opened this up, is actually put on a big ass fly, right? And we'll do that by, well, let's see. I got to close all this stuff. We're going to look at the ES and put on an at the money 50 wide fly. You can see already, I can tell the market is up this morning because we were closer to 6,000 Friday. And so we need to adjust this to 50 wide. So that means 60-10, 60-60, and 61-10. And all right, so we have a 2240 on the big ass fly. Let's take a look at what that looks like. Just widen it up a bit. So 2240 is under 25. It's right in the mid-range of our risk assessment. So if we were thinking 15, 20, 25, we're probably thinking 20 wide flies today. But it is also a candidate for a morning trade. However, we don't have any real impactful economic reports. I would rather see what happens after the market opens and see if we still have a viable trade, or if that premium is going to decay significantly between now and the market open. So it might end up that when 9:30 rolls around, because right now it's 8:15, that we may be at 25 or above. So I don't know. You choose your poison. I like being a little bit more risk averse. So there we go. Let's go back to Trading View, and then we'll take a look at our situation there. So that means that, right in the middle here, we'd be looking at 20 wide because I've updated this. So this should be 20 in the middle. And let's take a look at where the market is. Well, our direction. We are definitely up. So our bullish, we have a bullish bias. That means that we're choosing call flies, out of the money call flies, looking for that risk to reward where our debit is around 10% of our width of our flies, giving us about a 1 to 9, 1 to 10 risk to reward. And let's see where the market is. So that means that we're going to be pulling back to these market structures. So that's what we see here. I haven't drawn the lines in. Oh, I was so focused on getting all this other stuff done that I didn't do that. But we take our trades in the morning session between 9:30 and 12:30. All right, so we're looking for a pullback to one of these structural levels, like here. We can see this up here is the bottom of a rather large node. And so we've made our way through this big volume well, and now we're at the precipice of this node. So it looks like we're above yesterday's close by about 25 points. It looks like we're heading this way, and we'll probably break through. I'm looking for a pullback there, maybe also here at 60.34 or 60.57. And when that happens, and we see good support there, we'll put on a fly out of the money, a call fly, maybe something up here like this. Right? That's how we roll. So there you go. There it is. I know that this was much longer than normal, but I think that it will set us up for the rest of the next year at least, and the next 4 years. I think it's going to be fantastic zero DTE trading. unbelievable changes coming, whether you like it or not. I don't have any pony in this show other than I just want everybody to be successful. And but with these huge changes, I guess that is, I don't know, is that a coin flip, or do you think that it's on the positive side or the negative side? Comment below. I'd love to hear your feelings on that. Other than that, thank you very much. Go down, check out the 0DTE Academy, and we'll see you next time. Happy trading. Coach Ernie